Hey everyone, my name is Tyler Nguyen, broker associate with eXp Realty in Orlando, Florida. I'm here today in Tampa with one of the top agent, Julie Fang, and one of the top lender, Tyler Nguyen from BlueGrey Mortgage. So we want to answer some basic questions a lot of our clients have during the market now and the basic information of financing. So but before we do that, let's introduce some of the two big players here. This is Julie.
Yes, hi everybody. This is Julie Fang from Tampa Bay, Florida. I'm a real estate agent here in the Tampa Bay area. So it's a great honor to be here today with two big guys, like Nguyen and Tyler.
And I'm Tyler Nguyen, broker owner of BlueGrey Mortgage in Tampa, Florida. We're licensed in Florida, Texas, Colorado, and Kansas. I'm grateful to be here in presence with Thad and Julie. You know, they're very experienced realtors in the Central Florida area. Looking forward to giving you guys some more good information today.
All right, well, thank you everyone for being here. So we're going to start out with some basic questions, just help you get more familiar with the home buying process. As you know, going through the buying process, your loan is the first step you need to get. So there's a lot of questions, a lot of confusion, and we're here to help you clarify that. So Julie, you want to ask the first question, what we need to do?
Yeah, so a lot of people don't know, what do they need to do in order to qualify for a loan. So from a lender standing point, can you please share some of the information about what do they need in order to qualify for a loan?
Yeah, definitely. So the main thing for, what lenders look at is, number one, you're going to check your credit history. We're going to make sure that we got to figure out what credit range you lie so we can know which loan program to qualify you with. Second thing we're going to look at is your income, looking at your work history. Majority of lenders want to look for a 2-year work history, so they want to see that, hey, your work history is consistent or you've been working, right? And they're going to ask you, they're going to look at your gross income. If you're self-employed, it gets a little bit more tricky. Self-employed clientele it tends to be one of the harder loans to do, but we specialize in we deal with a lot of self-employed clientele. So with self-employed clientele, we look at 2 years tax returns. So that's what we base it off of. And we do have niche products where we don't have to look at tax returns. As we know, like past 2020 when COVID hit, a lot of business got affected. So tax returns were far less. So we had to get a little creative with that. So
that's great. That's great. So for someone that, let's say, maybe they have a business and they don't have the tax all done yet, or they don't have everything perfect, not the perfect clientele, but they have certain information, a little bit of this and that. Is there any special program or anything that you can help someone out? Maybe they don't have a bank statement or they cannot justify the whole income yet?
Yeah, that's a great question, Pat. Yeah, we've been doing a lot of, for our self-employed clientele, we've been doing a lot of 12 months to 24 months bank statement loans. And that helped out the client a lot because it's based on, they take the average of the deposits in the business transaction and they take either a 12-month average or 24-month average. And usually, with that income, it definitely can help the client qualify for the loan.
That's perfect. Also, I have worked with a lot of clients from our state. Florida is very popular, destination for everybody to come here, retire, be planning and everything. So if client is from our state, they be able to get a loan from Florida or from Ang?
Yeah, 100%. Another good question. Yeah, we have what we can do is we can either do a second home mortgage loan or else we could do an investment loan. So again, secondary home, if you go true conventional financing, minimum down payment is 10% down. You do have to show 5% of your own money in your account, bank account or investment account. So that is a cash in. With the secondary financing, you can receive gift funds too. So a little bit more flexibility with the down payment and where you're getting the money from. Right? Another option is investment loan. Right? Investment loan, a lot of people don't know, we do investment financing started at 15% down. Traditional is, traditional financing for investment loans is 20% down. And again, the money is a little bit more tight on the guidelines with that. So you have to have the money in the bank for at least seasoned in the bank for at least 2 months. Either your bank account, stock account, investment accounts, somewhat. Or else, a lot of people are doing, which is very popular, is the 1031 exchange. And they're selling a property and they're using those funds to buy the property. So that's another way to do it as well.
Perfect.
So as we all know right now, the market is changing, shifting. Most people use that word right now. So a lot of people is kind of afraid. Price going up, going down, interest rates fluctuating like crazy. So what are some strategy you offering to clients that to help combat this changing environment that's in the market? Some kind of buy down or refinancing? What's your strategy here?
Yeah, again, there's pros and cons in every market, and we're in a complex market right now. So with the higher interest rate, yes, you're getting a slightly higher interest rate, but honest truth that the interest rate actually, to me, in my personal opinion, is pretty normal right now. When I bought my house in 2008 or 9, I was at 6.3% interest only, right?
I think a lot of people have been getting
so use a lower rate.
Get a nice interest rate for a while, and they kind of got used to it, but it's pretty normal.
It is, and if you go back to history, in the 1980s or whatnot, I've had clients telling me they had a 14% interest rate, right? So they're actually right now the market the way it is, the rate is actually pretty right there. I think it's normal, considered normal, right? So, but just to go back on that, you can always refinance. In the current time right now, in the current market, we're heading to what's called recession. So anytime a recession comes around, the interest rate does drop. So yes, you can take the interest rate where it's at currently, and then in the future you can always refinance. Or else a lot of people are trying to buy down the rate right now. So that's another option. So some of my clients, my partners, they're asking, hey, if we buy this at this purchase price, maybe give us a seller credit for a buy down for the rate, right? So you could always go and strategize that route too.
I think that's a great idea, because right now, some of my clients, what we're doing is we see the market kind of slow down. So we use the opportunity to talk to the seller and say, hey, instead of reducing your price, why don't give us a credit for us to buy down the interest rate?
Yeah.
So that's in turn, they'll keep the house with good value, but they can use that fund to help buy down the interest rate. So it's a win-win for everyone.
Yeah, and again, let's think about it. In January or last year, 2021, people were paying at least 10% over the list price. Mm-hmm. So right now, you're getting it at purchase at list price, right? Yeah. So you're taking so there's pros and cons. You're not overpaying for the house, but the rate is where it's at, right? So again, I think it's a good trade-off. I'd rather get the home at value and take a slightly higher, a little bit interest, the way the interest rate is now, and then in the future, when the rates go down, we can always refinance.
Yeah, that's great.
Perfect. Yeah, I mean, nobody can time the market for sure, right? So
100%.
just whenever you're ready to buy, and it is an investment property or a house that you're gonna live in for at least 5 to 10 years, then it makes sense to buy when you're ready.
Exactly. And I'm glad you brought that up, the 5 to 10 year mark. We do have farm products too, so that's another way we're helping clients too, is giving them an option of the 10-6 ARM, 10-year 6 ARM, or else a 7-6 ARM, which means that the lender will hold that interest rate for 7 years or 10 years.
I think that's great, because the average naturally for most people now in our generation is we stay in a home for anywhere from after 7 years. Yeah. You see most actually buy a house and move within 2 or 3 years. Like I bought my house and moved within 8 months. Yeah. So we, in this generation, we move a lot faster than our parents. So the 30 years, we're not going to live in that house for 30 years. We're probably going to be in several homes by then.
I agree, 100%.
All right, thank you so much for all the great information today.
No problem. Before we finish, I got one quick question, because a lot of people have a lot of questions about stuff changing. They want to see numbers. So can you help us break down, if someone buy a house right now and they're worried our price might drop, but then we know the Fed is going to increase rate at least another 3-4 more times. So can you kind of break down and show that scenario? What should they buy now, or should they wait, or what is the situation there?
Yeah, I mean, I broke it down, and pardon me for my chicken hand scratch handwriting, but if say, for example, you buy now, and I wanted to break it down where it's kind of simplify things for everybody watching the video, is that say you buy now, and the purchase price is $400,000, 20% down, you're putting $80,000. Your loan amount is $320,000. Your interest rate is 5.875, for example, right? So your current principal and interest is $1,892. Say 6 months down the road, and I'm just throwing numbers out there, and you say, you have a client say, hey, I want to get a cheaper price, it's going to slow down, and I'm going to get a better price. So say, for example, they get the $350,000 mark, but the 400, they go to $350,000. Yes, you're going to get the better deal, but where it fluctuates is your interest rate. We all know that it's going to go, the interest rate is supposed to go up. So from 5.875, you might be going up a point more. So 1% more. So that brings your principal and interest to $1,839. But remember, the first 3 years or first 3 to 5 years, you're paying more in interest, right? So So you're not paying a lot of the principal with this higher interest rate. You're paying more of the interest. So again, this trade-off, I mean, it's a $53 saving. I mean, come on, we might as well get this at this price and get the better rate for now, right? Where it goes contribute more to the principal.
All right, thank you, Tyler. So it's a $58 saving. Here's one thing I want to point out is that most people right now sometimes buying a house to live in for their first home. Yet you are paying 100% interest rate on your rental right now. So in theory, in Orlando, a house around $400, rent usually around $2,200, $2,300. You're already paying more than your PMI. So right there, you're paying anywhere from $500, $600 more than owning a home. So if you wait, you save $53. But how much money are you wasting now? How much interest rate are you paying locally, currently right now, compared to if you just buy a house? So think about that and let me know if you have any question. For the Orlando market, you have me, Tyler Nguyen. For Tampa, you have Julie Fang. And for any of your lending question, you have Tyler Nguyen, one of the top lenders here that can answer any of your financial questions.